What are some other stories where, a customer or a client of yours has found extreme benefit and use, like save their business even because they had you as their
Yeah,
insurer?
yeah. Well, I do have another story. I don't know if it necessarily saved their business, but it was a very large claim.
Sure.
We had a policyholder that had been with us for 6 or 7 years, pretty sizable company. They had almost kind of like what you call a single debtor policy, where they had one broker that they sold a lot of product to, that their broker was selling down into Mexico. And when I think of brokers, I think of it as, a guy in his living room in fuzzy slippers that really doesn't have a whole lot of assets to back up anything. He's kind of the in-between guy,
Yeah.
but they were selling a lot of product to this guy who was selling it down through Mexico. And so they had a policy really to cover him, but they added two other small customers on it to make it all work. And they paid us about 30 grand a year. And for 5 years or so, there were no issues. And then I'm trying to think when it was. It was when the price of oil kind of plummeted.
2015 or
Yeah, around 15, sometime
Yeah.
around there. All of a sudden, this broker who was selling down into Mexico, one of his largest customers were people that built tanker trailers that they were selling them to the Middle East. And so he had a bunch of inventory and stuff that he had shipped. These guys were building trailers for a group out of the Middle East who just decided, hey, we don't need all that. Well, so the guys in Mexico didn't get paid. The guys in Mexico didn't pay the broker. And the broker didn't pay his supplier, which was obviously my client. And it was $1 million exposure. And so,
And you still have a job after writing that business?
it was written before I came on board. But
okay, you're off to
what's interesting is, I mean, he only paid us 30 grand a year. We cut him $1 million check, and he's still a client. So we didn't cancel his insurance. We still, he's still a client. He actually insures a much larger portion of his portfolio now, because he really there was a CFO change, and then the CFO now really understands how he can use us to drive new business, and so he insures a large portion of his portfolio now, and just really uses us as his primary credit shop. I mean, we're the first person he goes to when he looks at a new extending credit to somebody. So that's an example. We actually, you remember a couple of years ago when the big ice freeze happened down in Texas and
in Oklahoma.
in Oklahoma and
Texas.
ERCOT.
Some of our listeners in New York might not know about it, but
Right. So talk about saving somebody's business. So we had some folks reach out to us, and we do a lot of stuff in the commodity space. And so there were a couple of big natural gas. We've got a significant presence in the natural gas space on the distribution side. And so we had, when that ice freeze happened, I guess it was like the first part of February.
Yeah.
A lot of these natural gas guys who were selling natural gas at X amount per MMBTU, it went like, times 10, times 100, times 1,000.
Yeah.
Right. And so we actually approved over $100 million of cover on a large utility down in Texas. We had their financials. They looked great. And shortly after, when those bills were generated, I can't recall all the detail, but long and short of it, that large utility filed bankruptcy basically overnight.
Wow.
So
Yeah, because if your costs go up 1,000%, I mean, what are you going to do?
Absolutely, right? So that thing kind of happened overnight. Now, I think we recovered a lot of that, but when you think about a company that all of a sudden was owed, we'll call it a few companies, owed $100 million, and now their customer doesn't pay them and files bankruptcy, well, they've got to pay their suppliers where they bought their product.
Yeah, it trickles down.
It trickles down. And so we were able to step in as the intermediary and make our policyholders whole while we waited for the money to come out of the bankruptcy and the bankruptcy to shake out.
ultimately the consumer is going to get billed for that, and probably would recover a bunch of it, but you just got nailed in a huge cash flow problem.
Absolutely. So we bridged that cash flow gap for them, for our insureds, they could still go ahead and operate, and we waited for the money to come out of the bankruptcy.
Wow. And that's a lot of money. Like,
Yeah.
that's not just, I mean, 100 million.
Sure. And we recovered a lot of that. I don't know what we ended up paying at the end of the day, but again, we kind of stepped in as the intermediary. Without us, the guys that were owed the money, where do they come up with that capital to pay their suppliers? You know, either they have to draw down a line of credit if they had a line of credit large enough
Yeah, I don't
to
know
accommodate that.
if.
Man.
It's a big if.
This starts out so simply as insure my accounts receivable.
Sure.
And what I've already heard, you know, potential for increasing your business
Sure.
because of confidence factor and maybe getting more out of the banks because they'll increase your available cash off your receivables.
Sure.
And the last thing, we didn't talk about it specifically, but we've talked about it, is use you guys to help us learn how to run a credit
Sure.
process. I mean, actually use you for that. But as our listeners grow from just being, you know, I've been doing this myself and
Sure.
I run the cruise, to becoming more and more sophisticated and paying
Sure.
attention, there's learning right there,
Sure.
and very affordable in my mind.
Sure.
Matt, let me ask you that. Why do people not do it?
You know, I don't know. I asked myself that for 10 years.
I would think ignorance is a big one.
Yeah.
Of just
Yeah,
not
but you get
understanding.
in front of some
Well,
people and they go, nah,
Yeah.
$10,000.
I think a lot of it just might be they think they're either they think that they're not going to take a loss, or they think that their crediting process is more efficient than ours. I don't know. I've never been able to figure that out, because one of my things in Oklahoma is a great example, because you've got a lot of, like, I don't know, service companies that are doing work for the Chesapeakes of the world, or Sandridge, or people like that, right? And everybody thinks because it says Chesapeake, it's a very solvent company and strong. Well, Chesapeake filed bankruptcy a couple of years ago, right? And so people just think that they're smarter than we are, right? And they just think they're never going to take a hit,
Or they're stronger than the economy, which isn't true.
right? And my point is insurance is something that you need to buy when you don't need it, because when you need it, you can't buy it, right? So a lot of people think, well, Chesapeake's a publicly traded company. I can just open up their financials and see how they're performing. And if they're performing well, we're probably writing coverage on them. Well, guess what? When the price of oil plummets and companies like that start struggling, well, we see the same stuff that you see, right? Especially for a publicly traded company. Well, now, when you come to me after the price of oil has fallen and 6 months later the company's struggling, you say, well, right now is when I really need my Chesapeake exposure covered. Well, we're not going to be able to write that coverage because we're no longer covering them, right? That's now a high risk debtor. And so, I don't know why people don't buy it. I really don't. I've never been able to figure it out, because I will tell you this, my retention rate generally hovers around the 90 to 95 percentile of people that bind policies with me keep them. And whether that's for peace of mind, I mean, as a business owner, everybody takes bad debt. I don't care. Generally, everybody takes bad debt at some point in time. I've got another policy holder up here that hadn't taken a loss in 5 years. They just filed a claim for 150 grand. They pay us 30 grand a month. I mean, 30 grand a year. You don't take a loss until you take a loss, but inevitably, if you're a company that's looking to grow and you're having to take unknown risk, it's likely going to happen at some point in time. And so, I don't know why people don't buy this.
It's really interesting.
I think everybody should have it. So,
Well, I so agree. I think it's like the bonding, like our listeners, and we're talking about maybe it was last week. Anyway, it was before this, the bonding agent that we have on. One of the points is maybe you don't qualify for bonding yet, but you can start learning what's necessary.
sure.
And so instead of doing what so many people do and say, oh, I can't afford that,
Yeah.
say, well, how much does it cost?
Right.
I don't know, but I can't afford it.
Right.
Well, learn the bonding process.
Yeah.
Make contact with you.
Sure.
Learn what this is.
Yep.
All of those ancillary, those secondary and tertiary benefits, or the second, third, and fourth benefits
Sure.
we talked about,
Yep.
go well beyond just the fact that I'll get paid if somebody doesn't pay me.
Sure.
And so learn about it, because you never know when something's going to come up where, it's like your example. I'm going from selling $300,000 jobs to $2 million jobs.
Right.
Ooh,
Sure.
if this goes wrong, I'm gone.
Right.
Yeah.
Well, and also as well, how do you fund that job, right? You're probably going to need some sort of a bank involved.
Well, Yeah.
Now you go
well,
to the bank and you say, hey, well, my credit insurer or this group says that they could cover this $2 million exposure. That's kind of helps
this-
the bank feel comfortable
Yeah.
not lending on that.